All right, what's up, guys? We're going to be going over a nice option strategy to double your money. And we're going to be using Tesla stock as an example. I really like the stock, especially for the long term, continuously adding some recurring investments to my share count every single day. So Tesla is sitting at a price point of $1,000 per share, which has been doing pretty good. If we take a look at the past week, it's up 15%. The past month, it's up 29%. And overall, it's been doing really good with really nice rebound, in my opinion. So I really like the stock, especially for the long term, and especially how all these manufacturers are moving toward electric vehicles. So we're definitely heading towards an electric future, and Tesla is so far ahead from the competition. It's not even a competition at this point. But Tesla, we're going to be going over a nice option strategy to double your money if Tesla stays around this price point of $1,000 per share by 2023, which is going to give us just under a year of expiration. So the strategy we're going to be using is a call debit spread. Now, if we head over to the options chain here and we go over to a January 2023 expiration date call options, we can see call options are going to cost you tens of thousands of dollars, and most people just don't have that kind of capital. So we're going to be using a nice strategy to reduce the amount of capital needed in order to enter some call positions, some bullish neutral positions, which is pretty good strategy, and especially if you want to double your money and are bullish on Tesla. So as you can see, $1,000 call option is going to cost you 200, not 200, $22,000, and that's going to be pretty expensive. A lot of people just don't have that amount of money to blow on one call option. So what we're going to be using instead is going to be a call debit spread. So as we can see here, I have one opened for the 950 and $1,000 strikes. What that means is we're buying the 950 strike for $25,000, and then we're selling the $1,000 strike for $22,000. So this means we're entering a call debit spread, as we can see on Robinhood, and our total cost is only going to cost us $2,200. So it's significantly less capital that you're going to be needed, and it has a better chance of profit because as long as Tesla stays above $1,000 per share by expiration, we're going to be making our full profit. And our full profit is going to be the width of the strikes. So it's going to be 1,000 minus 950 minus the credit we're entering in. So we're basically going to be doubling our money. Our expected profit is going to be 2,700. That's the most we can make. Our profit is capped. And in another video, we're going to be going over an option strategy to enter a call debit spread with unlimited profit potential. But for this video, we're just going to be doing a simple two-leg option strategy. Very, very nice profit here. And as we can see on our options profit calculator here, we have a really nice chart showing us what our expected profit and loss is. As long as Tesla stays above $1,000 per share by expiration, then we're making our full potential profit of $2,700, just over doubling your money. It's 121% return, pretty nice chance of profit. And the best thing about it is the stock doesn't even have to rise. It could just stay where it is right now at $1,000 per share, and we're going to be making our full profit. So since this is about 9-10 months out of expiration, if there's small dips along the way, as we can see here, I opened it up early in January, and it did end up dipping to only $1,200 for this call debit spread, but it did rebound. So since we have a lot of time on our hands, the best thing is to set it and forget it, and basically just don't let your emotions get in the way of your trading strategy. Now, of course, you don't want to put in your entire account portfolio into one of these positions, simply because if the trade goes your way, you can blow up your entire account. And that's just not good. You want proper risk management, and you don't want to go all in on a specific play. You want to diversify your portfolio with different option strategies, different stocks, and overall, you just want to mitigate your risk as much as you can and not get too greedy. So this is a really nice option strategy, in my opinion, and you can over double your account by 2023 just using a Tesla call debit spread.